What if I tell you that there is a set of patterns that are reliable, could help you pass prop firm challenge accounts and grow your small trading account? Sounds too good to be true. Stick with me so that I can show you how this could be your golden ticket. If you are tired of chasing random trades and want real actionable strategies, you've come to the right video. So this strategy is going to focus more on the London session. And of course, you have some setups that will spill in the US session. Why the London? The London session is not just another trading session. It is where big players step in and the market becomes alive with liquidity. But there is a catch. You need to know patterns that consistently repeat themselves each and every week. In the next few minutes, I will share why focusing on these London session patterns will skyrocket your trading success. Without further ado, let's jump right into the video. Alright, so it all starts with identifying a peak formation high or peak formation low. There are three methods to do it, and two of them are the easiest, and the one that I'll teach in this video is the most difficult. The easiest ones, I teach them in the top 1% traders course, where I tried to simplify as much as I can to trade the markets. So in this video, we'll use the most difficult one, which is basically levels counting. So let's start by identifying peaks. Alright, so peak identification is a skill that is required by every trader. It might not be a trader who trades market maker or a trader who trades ICT or any other type of trading style. You need to understand how to identify peaks, because that is where much of the flows actually originate from. So when we count levels to the upside or to the downside, we reach what we call a reversal point. This is basic stuff if you have been following this channel for a long period of time. This comes as a result of 3 days of rise or 3 days of drop. The reversal point is what we term peak formation high or peak formation low. So that is what we need to first get. When you come to the charts trading this particular strategy, you are supposed to get what we call a peak formation high or peak formation low before doing anything. So this can be a cycle restart. When we say a cycle restart, that peak formation will be a reset peak. And there are characteristics of how you identify a reset peak. Right, so the biggest rule after identifying a peak formation high or a peak formation low is this one. When you have identified the peak, the biggest rule is always trade away from that peak no matter what. So identification of a peak, after identifying that peak, the next thing is now to trade away from that peak. If a peak is going to be an M pattern, you are supposed to be looking for sales only. If it is going to be a W pattern, you are supposed to be looking for buys only. Never get tempted to trade into a peak whereby you are tempted to go inside the peak region like this. By trading away from the peak, you will be looking for the following setups. So when you are now trading away from the peak, always try to look for these type of setups, whereby we are saying the Asian session is going to be used as a consolidation phase, and after that, you need to actually see the market go outside of the Asian session to create a pattern above the Asian session range. We call that particular pattern type 1 trade pattern, whereby the M is right above this Asian session range. I'll actually show you on the real charts so that you can fully comprehend. Then we have the type 2, which will be in line with the Asian session range. This is also another type of entry that is of high probability, and it repeats almost each and every week. So in this particular case, we are saying this one is one of those that we say it's an A+ trading setup, and this one is actually a less probable trade setup. Right, before we go over the charts, check out my free Telegram channel and be part of that community. I'll leave the link in the description box below. All right, so this is GBP against Canadian dollar, and this is basically a simple indicator that shows you sessions. The blue boxes are going to be the Asian session. So within that Asian session, what we are going to do, the first thing is to always start by validating a peak. As I've told you earlier on, I have a course called the Top 1 Traders course, and in this course I have simplified as much as I can in order for you to identify a peak. You do not need to do anything difficult, but by just seeing the markets you can pinpoint that this is a peak. So in this case we are going to take this one as the peak reset point and validate it as a peak. So if we have this particular point as our reset, it means that we are in a downward move. We can see that this one was actually a head and shoulders structure, or a head shoulder structure, meaning that it was a peak for sales. After that, the next thing is to switch to the M15 time frame, because the setups that we were talking about are actually clear on a smaller time frame like the M15. From that peak we can see that this was the peak, and after that peak you can see this was actually an Asian session. There was no pattern here, meaning this day we did not get an entry. On this particular day you can see the market actually went below, and we've said no matter how much you are convinced to trade into the peak region, you are not supposed to do that. And in this case you can see there was a beautiful M pattern, first leg, second leg. What type is this one? From the slides that I've shown you, this is the type 2 trade. So in this particular case we could have entered right at this engulfing pattern, and the market went actually went in our direction like that. We can see there was a W pattern. Do not be tempted to trade into the peak formation high or peak formation low. So if we check again, we can see that in this scenario we have been issued a completed cycle where there were now 3 impulses, 1, 2 and 3, and we reach this particular point which we term a peak formation low. From that peak formation low we now start again to look for entries away from that peak. You can see there was this particular pattern which was actually somehow type 1 or type 2, but there was first leg. It was actually a 3 hit to the same point, 1, 2, 3 outside the Asian session like this, and 3 hits, and the market went to the upside basically like that. On the following day we can see that there was this huge setup below the Asian session, and on the second leg that is where we would make our entry, and the market went to the upside basically like that. It still is going to the upside if you can see what is happening. So basically this setup is for those who are tired of following random strategies that do not have rules, strategies that do not have actionable steps to take an entry. In this particular instance we are saying find a peak, trade away from that peak, trading type 1 or type 2 M's in London session, and that's it. If you do so consistently, you'd find out that even your results will also come out consistently. On that note, we've come to the end of this video. Thank you for watching. Like and subscribe, and I'll see you in the next one.